Hi, Dan. Here's this week's question. How do you decide when to take profits or cut losses?
Yeah, this is a great question. It's one that we talk about a lot on In the Money, Heather. And for me, every time I go into a trade idea, I have a plan on both of those. Now, we often talk about cutting losses, especially if they're directional long premium trade ideas, to use a mental stop, about 50% of the premium spent that I'm using to express that view. And one of the main reasons there is that if you, let's say, buy a put for $1 and the stock goes up and it's worth about 50 cents, the probability of that going back into the money is not particularly great. One thing we want to do is make sure that we don't have our portfolios or our trading books littered with option trades that are going to zero. That's a surefire way to lose consistently. On the profit side, if I were to buy, let's say, a call and it's for $1 and the stock rallies and it's worth $2, I might look to take profit on half the position. If I was long 2 calls, I might take 1 off. And at that point, now I'm just kind of playing with the house's money, so to speak. So to me, when I usually have a double, I start thinking about how I might take a profit. And that could also mean taking a portion of the position off, or maybe spreading a long call or put position by selling an out of the money strike call in the same expiration, or maybe rolling the position one way or another. And a roll would just mean maybe to another expiration or to another strike, that sort of thing. So those are all ways to manage trades that I do, especially when I'm using directional option strategies.
Thanks, Dan. And to all our viewers, thank you for tuning in. Remember to watch In the Money every week for fresh option trade ideas.